Good morning, I'm Shannon de Rehove. Welcome to our webinar on the emerging ESG reporting trends in the EU and the US. Today's webinar is hosted on behalf of ESG Africa Conference. Today's session will take a deep dive into the EU's recently announced new reporting standards. The EU approved the Corporate Sustainability Reporting Directive, which requires EU and non-EU companies with activities in the EU to report annually on sustainability together with their financial reports using the European Sustainability Reporting Standards. We look forward to hearing what the panelists have to say. Please note the chat and the Q&A are available to you. Please post your questions in the Q&A and your comments in the chat. Both the Q&A and the chat are at the bottom of your screen. We are recording this webinar and we'll send the recording to you when it's available. We are also streaming the webinar live on YouTube and we'll share the link in the chat once it's available. I'd like to introduce today's moderator, Wendy Poulton. Wendy is the founder of Strategy Advisory Strategic Mindsets. She has a unique set of skills that combine strategy, sustainability, risk, and coaching. She understands that problems require new ways of thinking to reach solutions. Wendy will facilitate the discussion with today's panel, which consists of Bhongolwethu Sonti, the Africa Program Manager at GRI Africa, David Krone, the ESG Advisory Consultant at Trialogue. He'll be joining us shortly. Jayne Mammatt, Partner in Assurance Services for Sustainability, Climate Change and Equity at Deloitte South Africa, and Peter Walsh, the Senior Director for ESG Market Strategy and Partnerships at Benchmark Digital. I'll hand over now to our moderator, Wendy Poulton, to start the proceedings. Over to you, Wendy.
Thank you so much, Shannon, and welcome to everybody to our first ESG Africa webinar, and together with Krone Media this year. So we're very excited to have so many people on the line and to talk about this really important topic about ESG reporting and how it's evolving. Every year when we do the ESG conference, of which I am a founder, we always have reporting on the agenda because the landscape is changing so quickly and there are these international developments happening all the time. And the two that Shannon mentioned in her intro around the EU's new Corporate Sustainability Reporting Directive and mandatory requirements around that, together with the SEC's in the United States requirements for climate reporting, and some of the developments that we had at COP28 late last year with the Task Force on Climate-Related Financial Disclosures requirements now merging into the IFRS. We really are seeing a lot of movement in this area. So what we really wanted to do today is use our wonderful experts that we have here to do a deep dive into ESG reporting and the changes and really what that means for organizations in Africa in particular. So I'm going to start off just asking the panel just to give you a little bit of background about themselves and what their particular work is in terms of reporting, and to just give us a perception around what you think are the major shifts that you're seeing within the reporting environment at the moment. So we've mentioned a few. Are there others, or do you want to pull something out of those shifts which you think is significant? So Jayne, I will start with you.
Thanks, Wendy. Good morning, everyone. Pleasure to be here this morning. So just a little bit of a background on myself. I am a chartered accountant by background, but I saw the light about 20 odd years ago and moved into the area of corporate governance, sustainable development, climate risk and resilience, and all things that are related to it. And that's where I've been focusing on for the last 20 years, helping companies with sustainability strategy, embedding into the business climate risk, and then also the sustainability reporting angle of it, from reporting, integrated reporting to assurance of the information that companies are putting into the public domain, similar to financial audits. So I think just as an opening sort of view on where we are with all these new standards and new requirements, I think what is, the overwhelming shift is over the last couple of years is try to simplify the standards in terms of, we over the last 20 years, we had a 20 plus, 30 plus sustainability reporting standards, frameworks, guidelines, whatever you want to call them, had been built up from voluntary organizations. And it became very confusing for the preparers of reports as to what to use and what was the best one to do and what was relevant to their business. And it also became difficult for the users to make sense of what has been put into the market, make comparisons between companies, industries, regions, and whatever it might be. So very much that's what the move has been over the last 2 to 3 years to get rid of the wealth of standards and really move to. The aim was to go to one set of standards. We're not there yet because we've got the IFRS standards, we've got EU, we've got the SEC now as well. But really to get to a set of standards that all companies use to create that ability for interpretation, comparability, decision making, essentially for the users of those reports. Thanks, Wendy.
Thanks, Jayne. Bongo, I'd like to go to you next from GRI, seeing as GRI, I think, was probably the first set of internationally accepted reporting standards. What are your thoughts?
Thanks so much, Jayne. Thanks so much, Wendy, and good morning to everyone joining us today. My name is Sonti, and as Shannon mentioned, I lead GRI's programs here in Africa, focusing on building capacity within organizations to better disclose their sustainable impacts, but also doing some advocacy work as well at the regulator and national policy level. So I think the one thing that I'm actually quite excited about, I mean, Jayne mentioned the crippling multiplicity of standards that companies are facing even now today, and also with the new development of these standards. But I think one of the things that I'm quite excited about is starting to see the convergence and intertwinement of financial disclosures and sustainability disclosures. I think that will move us towards a place where companies find it much more easier to integrate their reports and better disclose not only internal impacts of their initiatives, but also better report impacts within the ESG frameworks on society broadly. So I think it's an exciting time. While it's a daunting task, especially for SMEs in Africa, to look at maybe adopting some of these standards, I think also the increasing leveraging of technology within reporting, such as development of digital taxonomies by IFRS and ESRS, will introduce a better way to classify and converge different standards for companies.
Thank you, Bongo. That gives us a great segue into Peter, because he works for one of those companies that has digital tools that help with this. So Peter, over to you.
Thank you, Wendy, and good morning, good afternoon to everyone. My background is in environmental management and sustainability. It was called environmental management when I first started working in this area, and sustainability has emerged over the last couple of decades to address the challenges we're facing. And through my career, I got more and more involved in the use of technology to address the sustainability challenges that we're facing today. And so I am now here today with Benchmark Digital Partners, who provide a technology platform to help companies address these issues. I'm based in France, and I'm in the middle of the biggest wave of environmental and sustainability legislation and frameworks that I have ever seen that we've seen in our lifetimes. And the CSRD is the pinnacle of that, with a tremendously challenging burden or requirement on companies to address the data gathering and reporting exercise. So there are 50,000 companies impacted by this legislation at the moment, who are trying to understand what they need to report and how they're actually going to do that. And of course, that's where technology plays a crucial role in facilitating that. My view and my company's view is yes, this is a reporting obligation, but it's also a business opportunity. The world is changing, and the only way that organizations will be successful is by addressing these issues head on and looking at how they can extract business value from these obligations. So yes, you do have to submit your report, and yes, there will be compliance penalties if you don't submit that report. And yes, there are 1,000 data points that are necessary if they are material to you. But the bigger question is not simply generating this report, it's how do I use all this data to operate my business more effectively? So that's what I hope that we can focus on today, is what's the real business value of sustainability reporting. And I think we've seen some fantastic work done, by I guess the GRI was the first framework that really emerged, and then there's been others since, and they all play a different role, but all of them are around creating business value. So that's I'm looking forward to discussing that with the panel today. Thank you, Wendy.
Thank you, Peter. I think that's a great point, and we're definitely going to get to it. I just wanted us to, first of all, just do a little bit more of a deep dive into the Corporate Sustainability Reporting Directive from the EU and what some of the big shifts are that we've seen under that. I mean, I mentioned one about it's mandatory now, which is for EU countries, which is, I think they're the only country in the world, or only grouping of countries where it's mandatory to report on sustainability issues, and certainly the biggest, if it's not the only one. And the other big shift that we saw is this double materiality about working up and down, your supply chains, and also what that means for their subsidiaries in other countries, but also their suppliers along the value chain, many of which are in Africa. So does anybody want to sort of kick off that question with, so what are there others that I've missed that you think are quite significant? Because it's pushing the whole reporting fraternity into another new direction, because a lot of companies already did audited statements, but certainly the mandatory part of it is going to be quite onerous. Any comments from the panel on that? Anybody want to go? Just chip in. Jayne, you look like you want to say something. You on mute?
Yeah, Peter came off mute as well. So I don't know, Peter, if you want to go first or...
Oh, sorry, I didn't see that. Go ahead, Peter.
Sure, thanks, Jayne. Yeah, I think that there's a number of, in some ways, the CSRD is kind of more of the same. We've been doing sustainability reporting for some time, and this is simply broader and deeper. But in some ways, it's fundamentally different to anything that's come before. And one of the ways that it's different is that whole question of supply chain. So probably most organizations in Africa will not be directly impacted by the CSRD. They won't be subject to it because they're not operating in Europe, or they're not listed on a European exchange. They don't meet the criteria. But if they are a part of the supply chain of a European company, or an American or an Asian company, which is subject to the CSRD, because there are some companies outside of Europe who will be caught up, then they will be impacted, because they will have their clients coming to them saying, the CSRD requires me to understand your performance and to understand how you're managing carbon, how you're managing your water resources, how you're managing your workforce. So that there's a number of clauses in the CSRD framework that describe that require you to talk about how you're operating your own business. And then there is this clause at the end, which says, and throughout your value chain, which is it's only a few words, but it has enormous impact, because it means these companies now need to look right down the value chain and understand what's happening with their suppliers. So I think there will be a lot of companies operating in Africa who are going to be getting requests from their clients saying, please explain what you're doing in respect to diversity, in respect to carbon management, in respect to biodiversity. and so on. So yes, it has, and this of course is quite deliberate. This is no accident. The European Union has said we want to manage our own companies, but we also want the impact of this to extend beyond the borders of Europe, because of course sustainability is a global issue. So yeah, it's a good point, Wendy, about the supply chain, and it's the impact of the CSRD is going to ripple out far beyond just the borders of the 50,000 companies who are directly subject to its requirements.
Yeah, and if I can build on that, like Wendy, like say, in terms of the mandatory, it is one of the first areas to move that way. Although obviously there's a lot of catch up being played now as well with other standards. So definitely, it's broad, it's wide sweeping in the mandate. And to me, that moves beyond, takes the point beyond that this isn't a reporting compliance issue for big listed companies. It is about business strategy, it is about business models. Was mentioned earlier that it is not about reporting, it is about actually how we run our businesses for the future, and make it mandatory gets to all sizes of business, because it becomes just good business sense to manage these issues. Just in terms of kind of the Africa impact, agreed, absolutely supply chain, but other companies are going to get caught up in it that might have, I say, the subsidiaries or operating units earn a certain amount of income out of the EU. Some of our South African companies will get caught up in that, and potentially not only their subsidiaries then have to report, but it can also feed back into the group level needing to report under EU, even if the group's not there. And then vice versa, there's a lot of South African companies are going to get required to report on it, because their holding company is sitting in the EU that has to report. And then it applies to all of their subsidiaries around the world as well that have to report in line with those group requirements. So, Africa is going to get impacted quite a lot in terms of needing to respond to and report along the CSRD guidelines, essentially. Just touching briefly on double materiality, I think it's been a part of, I think, GRI, and Bongo can speak better to that than me, but GRI has been very much about impact, the impact your stakeholders have on you, the impact you have on your stakeholders, and it's very much enshrined in the CSRD that you need to look at both facets, which is good. But it also does drive this, the materiality concept is very crucial to the CSRD. It is broad, it is wide sweeping, but it is about reporting what is material to your business in that double materiality lens. It's not a whole list of 1,000 indicators, checklist that everyone has to report absolutely everything. It is about understanding what's relevant to your business, what's material to your business, and then reporting effectively on that so that the stakeholders can sort of interpret and make decisions on. So the first thing to do is do that materiality process, so you know what you need to be reporting, collating, and managing, essentially. Bongo, I don't know if you want to add to the materiality, the double materiality and GRI's view on it.
Yeah, happy to add to that. I mean, in essence, this is a new practical approach to the nature of sustainability reporting. We now recognize that impact and financial reporting are interconnected, and therefore it should be done through a holistic process. And then specifically looking at the opportunity that lies for companies that are reporting through GRI or already widely accepted standards, maybe such as IFRS or ISSB, you then have the opportunity to have a sequencing effect where the reported impacts can then create a basis for companies to determine which other impacts at which point of time might affect the financial health and longevity and value creation in general of the company. So using this as a business strategy is also one opportunity that's highlighted. I mean, there's also the opportunity that lies with the standards that already are integrated. For instance, we have an interoperability index that we developed with ESRS, and we're working quite closely as well with IFRS and the ISSB board to really coordinate capacity building programs and ensure that there's a high degree of interoperability between some of the standards that we've developed and the other ones that have been developed by other standard setters. So there's an opportunity for companies that are already reporting to continue with what they're doing, not necessarily change or augment the way that they've been reporting necessarily, but rather to use the baseline they've established through some of the standards such as GRI already to address some of the upcoming topics from CSRD.
Thank you so much. And I just saw Douglas posted in the chat there that from 2028, non-EU companies that directly generate a net turnover of more than 150 million euro and have a subsidiary with a net turnover of more than 40 million, or a large or listed EU subsidiary, those companies will have to report their impacts, not the financial implications of those. But I think the general trend is that we can see that this is going to become more and more widespread, and the EU is going to spread the influence of it. And if you take it together with the carbon border tax adjustment mechanism, the two of them are really going to push companies that wanting to import their products or export their products into the EU quite significantly in terms of carbon management. But it's really good to hear, Bongo, about the coordination that happens. There was a question in the Q&A about what about all the additional reporting requirements from financial institutions? Because we know that can be through your loan covenants, it can be when you're doing the initial assessment, and there are other forms of reporting as well to government and through EIAs and that. What does the panel think about that? The role of the financial institutions in all of this, and how we try and harmonize with them as well as the other reporting standards. Peter, can we start with you?
That's a really good question, Wendy. I guess the European Commission has said if we're going to achieve the transition to a green economy, excuse me, that we need to mobilize the financial community because they underpin industry. And so they created the European taxonomy, which is a system of categorization which requires investors to classify their investments according to various criteria. Certain activities are defined as sustainable to a greater or lesser extent. There are 3 levels of sustainability there. So if any investor now wants to describe their investment as sustainable, then they need to use this taxonomy, this categorization. So this applies only to the investment community, not to corporates. But of course, that the investment community immediately turns around to the companies that it is financing and says, well, this is the information that I need to describe my portfolio. So it's another way, it's the CSRD is an obligation directly on the corporates, but this is the taxonomy is another way of leveraging the financial community to say, this is the information you need to disclose about your investment. And it is a very demanding and complex framework that they need to comply with. And as I say, they are now coming back to companies and saying, well, this is the information we need from you to understand your operation. And in fact, the CSRD does have some requirements which are directly linked to the taxonomy, that they are complementary frameworks. So yes, that's a key driver. Aside from you need to do CSRD reporting because it's a compliance issue. You should be doing it because it's a business efficiency issue and you get great value from it. But you're also doing it because your investor is saying, I need this information from you and I need to understand what risk you represent, and that's going to influence the sort of funding that I will make in you or not making you if I'm not satisfied. So yeah, it's really interesting to see the way the financial community has been activated and leveraged in this whole question.
Anyone else on the panel want to comment on that, or do you think Peter's covered it?
Yeah, I can just build on a bit. I think I agree totally with what Peter's saying. I think it's what we mustn't get to where, the financial institutions need to use information that's coming from these global frameworks and standards now, and not ask for their own specific information and create another set of frameworks or KPIs. I mean, that's what happened over the last 20 years. Everyone wanted something slightly different. And the whole point of moving to global standards or EU standards is to say, well, this is the right stuff. Let's all use this information, whether it's from an investor perspective or a customer perspective or supplier perspective. This is the right stuff to use. Let's use them, and let's not create that additional layer, because otherwise we'll end up in 10 years' time back to another 20 or 30 standards, essentially.
Yeah, and I think in Africa, there's been a huge push, especially within capital markets, for more integrated reporting. For instance, if you look at the JSE, has been requiring listed companies since around 2010 to disclose both financial and sustainability information. And also embedded within the King Code of Governance principles, there has been a long-standing advocacy for integrated thinking when it comes to reporting, emphasizing sustainability as a critical component of corporate governance. We've also seen great examples, for instance, within Morocco, where they are hosting the Green Capital Markets Africa Marrakesh Pledge. That looks at the integration of environmental considerations into financial markets. So in Africa, there is already a growing understanding and recognition of the intertwinement of financial disclosures and sustainability. I think now the real crucial element is on capacity, increasing capacity for companies to actually do that work. Of course, there's a lot of cost and complications when it comes to that, and maybe Peter can also speak to working with companies on that. But yeah, I think there's been a lot of work within capital markets in Africa to integrate the two.
So thanks, Bongo. I just wanted to add on to that question, because there's a question in the chat, which I think is a good one. I mean, we mentioned earlier about we now seem to be moving towards mandatory reporting. And the question from Deloitte from Webber is, what are your thoughts about mandatory versus voluntary sustainability reporting in a South African context? Do you think corporate South Africa would be ready to tackle mandatory reporting on sustainability? Jayne, maybe you best placed to have a stab at that one, at least to start here.
Yeah, no, sure. No, thanks, Wendy. So, yeah, look, I think mandatory reporting in South Africa is going to come. Other countries in Africa have already committed to it. I think Nigeria is going to phase it in by 2027, I think, is their latest timeline, and they're going with the International Sustainability Standards Board, the new IFRS statements. Zimbabwe's been talking of doing it, I think Tanzania as well. So I think from an Africa point of view, it's beginning to move that way. And for South Africa, I think it's the general move and talk amongst the sort of policy setters and some of the regulators is that we will move to mandatory reporting here, probably on using the IFRS S1 and S2. So I think we can expect it probably in the next couple of years, and there's lots of momentum on that. I think I think the larger companies are ready for it, because we have been, we were the leaders in some of the sustainability reporting the last 20, 30 years, big uptake of GRI over that period as well. So I think the larger corporates, we're ready for it. I think it's the smaller ones, like we see in the EU now, that are getting sort of applied to it, that will have a bit of a challenge, but it always comes back to materiality. It's not a whole list of information that you don't use. It is about what you use in the business to be successful. So it all makes sense. And then just finally, linked to that mandatory sort of view is again, if we want to be globally competitive, and trade is one of them, like we've mentioned, the supply chain, the CBAM and whatever. But if we want to attract investors globally, if we want to attract talent globally, then we really need to be moving along with the global lines as well. So a lot of companies are already seeing that and starting to move that direction anyway, even before mandatory reporting might come in.
Thank you. And there's a connected question, I think, also maybe Peter or Bongo can answer that one, about what is it outside of Africa as well? Are we seeing this move towards mandatory reporting? People are asking about China, for example. Do we know what's happening there? And are they likely to take up mandatory reporting as well, given their supply chains into a lot of other parts of the world? Peter, see you've unmarked.
Yeah, so it's an interesting question. There is a lot of legislation emerging around the world. And I know, for example, China is working on their own taxonomy, and they are in communication with Europe to try and make them as compatible as possible. Russia was mentioned there. I'm not sure that there's much. I won't comment on that, but certainly in Asia there is a lot of activity. I know in Singapore, in Malaysia, there's a number of countries that there are various initiatives that are emerging. So I think this is very much, it's being led really by Europe in a global sense, but it is touching every part of the world. And there is a phrase called the Brussels effect, which describes when something is implemented in Brussels by the European Commission, the impact just ripples around the world. And a company that's operating in Europe will say, well, we need to comply with these standards. We're not going to have one standard in Europe and a different standard in America and a different standard in Asia. We'll just take the most demanding standards, and that will become our corporate standard globally. So this is really the way that Europe is kind of setting the standard. And then, as I say, that there is certainly activity in other countries who are doing something similar to what's happening in Europe, and there's a lot of work to try and align those. I know, GRI and IFRS and CDP are speaking intensively with each other behind the scenes to try and align their frameworks and their requirements. So there is a lot going on there, and I think probably you could contact Jayne from Deloitte here. The companies like Deloitte will have inventories of all the legislation in the world, and there is a significant amount there. So I won't go into detail, but someone like Deloitte would certainly be able to respond to that.
Bongo, anything you want to add to that?
No, nothing to add from my side.
Okay, then I'm going to ask you also a follow-up question from something you spoke about at the beginning, and then we're going to move on to like the benefits of this, because I think we don't want to make it all doom and gloom. But you mentioned particularly the impact on SMMEs. And given that so much of Africa's economy is driven by SMMEs, when I was doing some work for somebody and I looked for the definition of SMMEs in Europe, and it's like, okay, it's not the same definition as us. How do those small SMMEs, how are they going to cope with this if they want to be part of that broader supply chain? And do we need to start looking at conglomerates and things that spread the risk and spread the resources around? But first of all, before you answer, I'd just like to welcome David. Welcome, David. This is David Krone from Trialogue, who's joined us. And David, we've discussed the EU, the new Corporate Sustainability Reporting Directive, and we're just now talking about some of the impacts on Africa. So I will bring you into the conversation. Welcome.
Thank you.
Bongo,
it's great to be here.
Yeah, I think for SMMEs, there are a lot of challenges that they'll face. There's still a strong developing need for capacity building in terms of SMMEs, and that's depending on what your definition of an SMME is. For instance, as with Douglas's message earlier, when he clarified that the turnover threshold for both companies and subsidiaries reporting is at 150 and 40 million. So I think for SMMEs right now, it's mostly looking at ways where they can view ESG or sustainability from the value creation and business strategy perspective. And I think that will help them to build capacity to meet some of these upcoming regulations, not necessarily capacity building from the view of trying to get them to start reporting, but rather from starting to see the process of developing, for instance, or determining materiality as a way to determine business strategy. And I think that will help to put them in a better position to then meet some of these regulations moving forward.
Thank you. Anybody else want to add to that issue about SMMEs? No. Okay. So we're going to move on then to, I think a bigger question around the benefits of some of these initiatives that are happening, and how organizations can use them to make sure that we do stay in these markets in future. So, Jayne, can we kick off with you?
Yes, I think it does come back to the point that you know, the information that's going to be required from a supply chain point of view to trade is still very much linked to your business and sustainability and climate. And I do tend to use that phrase rather than ESG, because I find ESG quite a narrow view on some of these issues. Sustainability and climate is creating genuine risks and genuine opportunities for your business, no matter what size you are or region that you operate. And to understand that and build those risks and opportunities into your strategy, your own KPIs of how you track your own performance and exposures and growth or sort of threat to your business viability, then it really becomes just good business sense. Linking back to I think what Bongi said about, you know, is about the value to your business. So these things are not, if done properly and considered properly, it's not arbitrary information that someone wants from you. It's stuff that really you should be measuring as a business to be successful. Like, so that applies to a small business to a large business, because the broader sustainable development challenges, the climate risk, that the climate change, that the risk it's creating, the need to move to renewable energy and reduce our carbon is a business issue, not a reporting issue. So that's how I would encourage everyone to look at it, and by building that into your business activities and decision making, then you will automatically fulfill some of the requirements that you might get from the supply chain into Europe or wherever it might be, in terms of providing them with information so that they know that you are understanding these issues and managing them appropriately.
Thank you. David, would you like to comment?
Yeah, thank you. I'd love to. I think those Jayne raises really good points. So for us, I think it's, you know, it comes back to integrated thinking, and it comes back to first principles. So if you have a clear idea of what's important to you as a business, and you are purpose-led, and you are, you know what's material to you, and it's linked to strategy, and it's linked to purpose, and then you have measures in place that are to manage those issues effectively. I think it's a proactive way of existing as a business. So when these codes and standards come into place and they start becoming mandatory or start affecting you, you're actually well prepared. So because it's going to be, I think what's key to note is that the shift in codes and standards that's happening, it's moving away from just a sort of topic disclosure focus, where it wants to see, oh, you've got your scope 2, you've got this measure in place, you've got that measure in place. It's really asking you, are these things embedded in your company? Do you have a strong idea of what's important to you? And are you measuring them? And are they linked to strategy and purpose? And those are the key things that you should be asking yourself. And as Jayne pointed to, that's just good business practice, really. So, yeah, I think I'll leave it at that.
Bongo, Peter, you want to add? Bongo.
Yeah, I think just emphasizing on my previous points, if companies can focus on using their materiality assessments to identify their sustainability and climate issues that are relevant to their business and stakeholders, this can really be meaningful and help to make the process more manageable for them. So I think mostly focusing on materiality would be something that companies need to adopt, not just looking at the burden of reporting or the fact that they have to disclose certain things, but I think focusing on materiality would be the best way to approach it.
And perhaps I would add to this. Excuse me. I think it's kind of ironic that what is really a business issue has become in some ways a political or philosophical issue, that we've actually found in our business that some companies, particularly in America at the moment, where there is a pushback against ESG, will not, maybe less open to talking about ESG or about sustainability. But if you go into a company, excuse me, if you go into a company and say, look, I can help reduce your energy consumption by 10% and save you X number of dollars, or I can help you improve the efficiency with it, your water usage efficiency, then any company management is going to say, that's a great idea. We absolutely want to do that. Now, secretly, don't tell them this is actually sustainability, because that's what it is. But you don't have to say that. Just look at it as a business issue, and then your objectives will align. So we have, just as a practitioner in my company, we have deliberately at times avoided this. Like, this is an ESG issue that we're going to help you address. Don't even mention that word, because you'll get thrown out the door. Just come in and say, we're going to help you run your business, save costs, make your staff happier, make your investors happier, and generally improve your business. So it's kind of funny that in a sense you have to, if not hide, at least sort of de-emphasize that aspect of sustainability. But it's not such a difficult thing to do, because in effect you're just helping companies to operate more effectively. So that's really that's the approach we need to take sometimes.
No, thank you. I think that's a great point. And I mean, linked to that is also, if you're working with your supply chains, you will find all kinds of other benefits around efficiencies that you can bring to bear along the whole supply chain as well, which benefits everybody. Yeah, so I think those are all great points. I wanted to ask another question about, so we'll turn a little bit more now to sort of what we think is going to happen in the future around reporting. So we heard Bongo talking about this coalescence of the different reporting standards and how we can hopefully get towards something that is more standardized, so that we don't have multiple different methodologies and things out there. But if you look at like the TCFD, for example, they also force you to look into the future and say, what are the scenarios going forward? What are some of these future thinking risks? What's the uncertainty in the future, which is very difficult for reporting where you're mostly looking backwards, right? What was my performance last year? But it's forcing you to start looking at impact and in the longer term as well. So what does the panel think about what some of the emerging trends are going to be around us? And I agree with Jayne, it should be sustainability reporting, not necessarily ESG, because that is broader. What are the trends around sustainability reporting that we can expect to see, and what would some of those be in terms of their impact on Africa? Anyone want to start? Okay, I'll pick on David. Thank you, David.
Well, I'm not sure how much you've spoken about the ISSB standards and CSRD yet, but obviously, I think ISSB standards is definitely here. It's arrived in South Africa, and a lot of the companies we're working with are thinking about them and preparing for them. And I think what's key there is the quantification of sustainability-related risks and opportunities. The idea that the common language becomes a financial language. So, when you're talking about human rights issues in your supply chain, or you're talking about climate change, there's actually a number put to that potential risk or the opportunities that exist there. I think that's a huge shift in the way that sustainability is conceptualized. And it also, I think it comes back to what we were saying, it's bringing sustainability back to how it affects the company financially. I think that's pretty groundbreaking. But, excuse me, it's quite an intellectual exercise when you start trying to do this. And it's a difficult one. And maybe we can get a little bit into that. I'll pause there. I think that's the key shift for me.
Anyone else? Peter?
I guess I would just add, I kind of feel like I need to wave the technology flag here, because I agree completely with what David just said, and it's an incredible challenge for companies to understand what's happening within their business and how to change what's happening there. And whether you use my company or one of our competitors, it doesn't, that you need to put in place. There are some fantastic tools available to help you understand what's going on within your organization. So I think technology is playing a crucial role in the whole process of gathering and reporting data. So it is at one level a data management issue. It's also an organizational issue of how do you get your team aligned and speaking the same language and working towards the same objectives. And there are ways of setting up that workflow and that process so that your team is all collaborating effectively, and there's fantastic collaboration tools available. So I think it's not the focus of our discussion today, but I think all the things we've been talking about you can take advantage of technology tools that are around today to address that. And if you don't mind, Wendy, I'd like to just respond to a question that came up in the chat.
Please do.
I think the term efficiency is evolving into a swear word because AI is promoted as a band-aid in some industries. What's the benefit of taking things at a snail pace? It's an interesting question. That snail pace, the preference is to say, well, you need to transform and you need to move, and you can achieve great things if you do it correctly. But I think it's just that phrase, a snail pace, sort of caught my attention, because sometimes it really is good just to take small steps, just to do one small effective action or program, and then build upon that. So we always feel that the companies that want to transform themselves within 12 months are probably it's a very high risk strategy, and I would certainly recommend perhaps a little bit faster than a snail, but take it slowly and carefully to work your way through how you're going to transform your company.
I think that's a great point, Peter, because you don't have to start with reporting on everything from day one, right? It's an evolution, and GRI has always been good at sort of helping SMMEs as well. Show that that's the way that you can start off with, just inculcating it into your normal business practices. Anyone else want to comment on sort of the future shifts that we're going to see in sustainability reporting? No.
Yeah.
Yes, Bongo, please go ahead.
So no, I was going to speak to, because you mentioned that at the moment these standards or current practice of disclosure only help us to look at previous performance. But I think, as Peter mentioned, the drive towards technology playing an enhanced role will help stakeholders, particularly, to have a much more real-time view of a company's sustainability performance, and even for the company internally, for them to take decisions to mitigate risk quite earlier. But I also think there's also the growing convergence at a global policy level, especially when you look at CSRD, that might particularly serve as a template for regions, like, for instance, someone mentioned China and Russia, what's happening there. These could be templates for regions to develop their own reporting standards, and we could then see maybe in the future a more unified standard platform being developed that companies can utilize. But we also must be quite wary that there might also be the risk of, especially now, globally fragmented markets, especially given that, there are certain regions that have adopted certain or are using certain standards or reporting disclosure guidances that some regions are not, and there are certain gaps. But I think, to my point, what I wanted to say is technology is going to play an enhanced role in providing real-time sustainability performance that could help with strategy and stakeholder understanding. But then we're also going to start to see more of a convergence at a global policy level when it comes to creating a unified or some sort of unification when it comes to standards.
Thank you, Bongo. That sort of segues nicely into a question from Harry on the Q&A about, and I know it's a discussion, I'm involved with the BRICS Business Council, and they were talking about doing a BRICS ESG sort of reporting standard that reflects the global South issues more strongly than the current ones do. And there's a question about that: are there African or other global South approaches that reflect their own priorities? So what's the panel's view on that? David, I'll start with you.
Sure. I think as long as the code and standards that you're dealing with gives you the freedom to define your own materiality, then it's not too important that you necessarily have one that is made specifically for the global South, because you can, in essence, decide, you know your context, your the system which you nested in, and you can determine what's important to you as a company. So yeah, I hope that answers the question. That's my view.
I agree with you, David. If I can just add, I think it's about materiality and explaining that. I think that the challenge that is already there and might continue to be, depending on how users interpret that information. But some of the investors and stakeholders don't always understand the context of where you're coming from. And yes, the double materiality process is then meant to be explained, so you can explain why this is and that isn't. But we do need the investors, the rating agencies, all these people to get on board as well. I had a conversation with a client of mine the other day, and they got a negative comment back from I'm just going to say a rating agency for globular sort of view on it. That their renewable energy for their South African operations was, they weren't doing their own renewable energy or whatever it might be, or they were using REITs. I can't remember the detail, but it was clear that agency just applied a broad brush approach to it, instead of saying, well, actually, we understand you're in South Africa. Eskom is 90-odd% coal. Building your own renewable generator or whatever is not practical. I mean, we are moving down that road, admittedly. But that's going to be the challenge, not so much, like, say, using the standards and applying the materiality to how do these global users use that information, understand the context, and say, actually, I understand why this is material or not material, or this is what you're doing, happy with that, and let's move forward, instead of constantly giving the global North view, well, you're not on renewables, therefore you're not very good, which is essentially the message that can be sent at the moment.
Yeah, and I think that's a great point. It's how you interpret the information that's coming back, right? Yeah. Bongo, did you want to add to that, or Peter? No. Peter?
I would just endorse what David and Jayne have said. Double materiality assessment is the key to this. That there is the CSRD and the other frameworks are just massive monolithic requirements. But in fact, once you do your materiality assessment, then perhaps 30% or 50% of it might be non-material to you, and you don't need to address it after all. So that materiality is is crucial. And you know, if you're running operations in Norway and South Africa, for example, then you know, water, for example, would be an issue in one location, perhaps not the other. So that materiality assessment is crucial in identifying what is relevant and important for your business where it is.
And maybe just to reflect as GRI, I mean, for us as a global standard setter, one of the main things that we focus on is on including a regional voice when it comes to the process of developing standards. And I think that's the most important thing, is to ensure that there is relevant consultation with stakeholders within the region to reflect that voice in the standards themselves. And that's reflected with our recently released mining and biodiversity standards, where we held regional consultations here in Africa as well, to kind of understand for organizations and companies on the continent, what would be some of the key topics that would be material to them to reflect on the standards. So I don't think we necessarily need specific standards for South Africa or a certain block necessarily, but we just need to focus on ensuring that the process of standards development has an inclusive voice within it.
Yeah, and I think that's a critical point. Thank you. So we're getting towards the end of our time. I'd like to sort of just close off by asking a little bit about skills. And what we think, you know, this is quite a big shift. Mandatory reporting is going to have to be audited. So that is another whole set of skills also that's going to be required for that. Plus managing investors and financial institutions, linking all of this. I see there was a question earlier on carbon credits and carbon reporting for that. There's other reporting requirements that are going to come up if you want to participate in Article 6 or other carbon trading mechanisms. It's a whole different set of skills. So I guess my question is twofold. The one is, do we see we're going to have a deficit of skills, and what should we be doing about this? Can we do anything collectively? And then the second part of the question is, how are these skills going to evolve over time? And do we see that we're going to need additional skills over and above what we're needing right now? Or is the opposite true? Is it going to become technology-based and we don't need as many skills, at the end of the day? So Peter, I'll start with you.
Yeah, I think, your point there about technology, technology is essential to address these challenges, but it is in no way going to replace or make the skills, the human skills that are required, the human resources. That requirement's not going to go away. We'll just have better tools. That's all. I think it's a fascinating change in our industry at the moment that we are addressing sustainability from that. There are so many different types of people that are addressing sustainability, and it's now you might have a background in accounting or law or engineering or social sciences, and all of those people have are just crucial to address this. So, what is a chief sustainability officer? It's really hard to say. There's no real definition of that. It could be coming from a range of different areas. So, and I think particularly with ESG, which is really combining the financial aspects with sustainability, we're now getting, there is a huge community of practitioners who have a financial background, but don't have that history in environmental management, and are trying to understand and make sense of that world. And there are also a lot of environmental managers who are trying to understand how finance can be used and what impact it has on their jobs. So I think the skill, I think it's something that's evolving, and it's something that we need to pay a lot of attention to and activate our education system, our universities, and our ongoing professional institutions to stay on top of this, because it's a constantly a sustainability officer needs to be fluent in so many different types of languages now, from engineering to finance. So it's a really changing and challenging question.
Thank you. David, your thoughts?
So I would echo that. I think systems thinking is really important, that you have a sort of, that we're not too focused on siloed knowledge. There needs to be multidisciplinary knowledge, because all of these issues, and I think it also like, if we want to sort of link it back to the changes in codes and standards and things, we're looking to try and quantify now very soft and tricky issues like climate change. So you need to have strong knowledge of environmental impact, but also strong knowledge of finance and different scenarios, and the how you quantify that. I think so. Those sort of skills are going to be really important. And I think also as AI, I mean, I'm not an expert on AI, but as these new technologies come into play, also the softer skills and sensitivity to things like empathy, I think, are going to be increasingly important for leaders in this industry, because you're going to have to put yourself in the shoes of other people which your business impacts, and understand what your stakeholders need, and be prepared to ask questions and lead in a more participatory way than we perhaps have in the past.
Oh, thanks, David. Those are great points around skills. Those soft skills are not so soft. Critical thinking and all of problem solving, all of those kinds of systems thinking, they're all critical in today's world for sustainability. Thank you for raising that. Jayne?
Yeah, I just build on that. You spoke about the auditing of this reporting as well, and what skills are needed for that. So I think the accountancy firms have been auditing this information for a long time now. 10, 15, 20 years, and what a lot of people don't realize is we're not all chartered. I'm a chartered accountant, but the team's not all chartered accountants. We employ environmental scientists, we employ social scientists, we employ economic people, health and safety, the whole range across sustainable development. And then we use those skills, that knowledge, to then audit the information using auditing standards, yes, but with the right subject matter person or expert as part of the team. So, and it definitely helps, because you need to understand what you're auditing to make sense of whether it's right or wrong, or what the risks are, or what's going on. So I think it's new skills will be required, and teams of different skills will be required to address a lot of these issues, because it's such a broad topic.
Thanks. Bongo, do you want to comment? And there's also a question that you can maybe cover while you're doing that, about African countries not being technically engaged regarding ESG, and how do we that's a skills issue as well. And is there anything DRI? I know you guys are doing things about raising skills in Africa. So thank you.
Yeah, thanks, Wendy. So one of the initiatives that we're undertaking is looking at ways to integrate sustainability, climate, and ESG topics within mainstream higher education. And that's through working with, for instance, in Kenya, the likes of Strathmore University, or the University of Zimbabwe, as well as Lagos Business Schools, to see opportunities, whether it's in their accountancy courses or business leadership courses, where we can integrate these topics to foster that systems thinking or integrated thinking for some of these professionals. And I think there's also a growing need within, for instance, platforms such as SAICA and SAVPA, through the CPD programs, to integrate some of these topics as well, to assist some of their members to be able to better meet some of the skills and education needs. But I must say, I don't agree with the sentiment that in Africa governments aren't necessarily engaged when it comes to sustainability. I think, for instance, some of the initiatives I mentioned earlier happening in Morocco and here in South Africa reflect that there's a growing understanding and recognition within African policymakers and regulators that sustainability and ESG is integral to ensuring that Africa's development is fostered in such a way as that it not only protects the environment, but ensures that there's some sort of social economic mobility for people. So maybe in some of the policy wording, it's not worded in terms of, oh, this is a sustainability goal A or what it might be. But there are lots of initiatives that I can mention here. For instance, broader in Africa, there's the Africa Green Bonds market, where you have various Africa countries that are focusing on ways to finance sustainable projects. And this is a broad effort to create a green bonds market in Africa. We have Pan-African ESG reporting standards that have been developed that are relying on already established standard setter platforms such as the ISSB. You also have regulators within Ghana, Nigeria, and Kenya and Swaziland as well that are looking at ways to integrate sustainable development charters or policies within the already existing policy frameworks that they have for regulation of business or unlisted companies. So I think there is a growing a sentiment within Africa to adopt sustainable business practices and sustainable development approaches to policy in general.
Okay, thank you all so much. We have a couple of outstanding questions. Putela just wanted to ask a question about BEE requirements and how they would fit into sustainability reporting. Anybody on the panel got a view on that? No, but I don't think they will be viewed as a liability. I don't think so. Putela to try and answer that question. And then your question about, well, I don't think it's a question about the Taxi Association. It's just a comment. So thank you for that. So I think that brings us to the end of the session. Would any of the panelists like to make a closing comment, or have you said everything that you would like to say? No, I see lots of shaking heads. Okay, but then that's just, I'm going to hand back to Shannon, but just to say thank you so much to the panel. You've been a real pleasure to moderate, and it's been a really interactive and good session. So thank you. Shannon, back to you.
Thanks, Wendy. That brings us to the end of the discussion. I'd like to say thank you to Wendy for enabling a thought-provoking discussion, and also thank you to the panelists, Bhongolwethu Songi from GRI Africa, David Krone from Trialogue, Jayne Mammatt from Deloitte South Africa, and Peter Walsh from Benchmark Digital. And finally, thank you to the attendees for taking the time to join us for this discussion on the emerging ESG reporting trends in the EU and the US. If you're interested in hearing more about the ESG Africa Conference, please visit the website at www.esgafricaconference.com. I'm also launching a poll quickly, if you could answer that while we close off. It's on your screen now, and we would appreciate if you could take a moment to complete that poll. The recording of today's webinar will be sent to you in due course, and if you have any additional questions, please be in touch. You can reach us at shannon@creamermedia.co.za. Thank you for your time, and goodbye. I'll just hold on for a bit while we wait for this poll, but thank you very much for joining us.
Thank you, everyone.
Thanks, Wendy. Thank you, Shannon. Thanks, everyone.
Thanks, everyone.
Thanks, everyone. Take care.
Thank you all. Bye-bye.
Bye.